Yo, what up everyone? In this video, I want to fix an issue that I see in a lot of other traders, which is going to result in taking less losses. I review a bunch of members' trades in my Discord community, and everyone has great analysis. However, I would say 75% of the traders take losses, even when their analysis is correct, because of one simple issue that we're going to go over in this video, and we're going to tweak it to make it better. I'm seriously confident that this is going to help all of you watching this take better trades with more profits and less losses. All I ask is if I provide any value into your trading, if you could just drop a like on this video, I would appreciate it. And I also recommend you to follow me on Instagram at Ameritrade. I'm going to link it in the description below. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you aren't going to find anywhere else. The link is in the description below. But now let's get right into this lesson. Before we get into the technicals with each setup, I want to make sure that we're on the same page psychologically. And I see a lot of new traders, they're very attached to the money. They only trade for the money. Obviously, we're all in it to make money and make our lives better. However, if we solely focus on the money aspect, we're setting ourselves up for failure. So what I recommend doing and what changed my mentality, and it's going to be the basis to this, is detach yourself from the money. A lot of people are attached to it, and when you become attached to something, your emotions do the decision making for you. Instead, fall in love with the process, fall in love with getting better every day, increasing your knowledge, taking better trades, and waking up the following day better than you were yesterday. The process is so much more important than the profits. Profits are a byproduct and they follow the process. It's like us going to the gym every single day. If we're in there consistently working, lifting weight, getting better, then we're obviously going to be stronger and we're obviously going to look better and more muscular. It's the same thing with trading. If we focus on our process, getting better, getting stronger mentally, and learning new things, the profits are going to follow. It's impossible that the profits don't follow if you follow your process. So I see a lot of people, they enter the market without a predetermined plan. They enter on a whim because they get an adrenaline rush, just like gambling. They want to make money. This causes decisions to be made based off of emotions. I see it all the time with new traders. I train members of the invested trade community to stop thinking like a normal retail trader, ones that always fail, and think differently in order to see success and results. A lot of traders see something coming down and they automatically think they have to sell it, or they see something coming up and they automatically think they have to buy it. There's no process in that. There's no edge in that. And if you are buying or selling something because you think something's going to happen or you're trading on a whim, then you are gambling and you're better off going to the casino. I don't view trading as gambling because I have an edge and I only trade my edge. Many people don't understand that and they go into the market gambling and they lose all of the time. I stick by this simple philosophy. I don't trade the market to make money. I trade the market to trade my setups because I know my setups are going to make me money. I trade to follow my process because I know my process is going to make me money in the long run. So with this being said, I want to get into this trade example. This was from last week or whenever you're watching this video. In the pre-market plan, I post these every single day in the Discord community. It's only available for Invest the Trade course members, pre-market plans, and commentary throughout the day, setups I'm watching, levels I'm looking out for, and potential trades I'm looking to enter. In this example, we had demand lower, and we also had supply at 4,600 to 4,614. It's going to act like a tough area to get above, and I have two scenarios. We had a bullish scenario if we could get above, and we also had a bearish scenario that if we fail at this 4,600 supply, we are going to balance the rest of the day or sell off to test this 4,567, 4,556 or 4,551 demand again. So opening up the market in the first 15 minutes or so, we rallied into the supply zone. I did not take this trade short at supply the first test. I did take this trade and capitalize on the downside move. But on the first time testing it, I just did not see valid confirmation just yet. So now let's just act like a hypothetical trade scenario. I'm going to remove this right now. Let's just say we come into supply for the second time and we are a trader that needs improvement. This is the type of analysis that we need to see. So let's just say we got in SPY puts down here. This is the S&P futures chart. You could trade SPY options off of this. You could trade the future itself. They are all related. It's the S&P 500. It's my favorite instrument to trade. So let's just say we got short. We played the SPY puts, the 458 puts at this oval right here. We got a lower high or double top at supply. We're speculating that this downtrend line is going to break. This is a good trade in my opinion. Valid confirmation, good entry. And for me, for my analysis to be proven wrong, it has to be at the high of day. A lot of traders, I see it all the time, they're place stop losses based on a dollar amount. In my opinion, your stop loss has to be placed where your analysis is proven wrong. And where you enter to where your analysis is proven wrong has to make sense from a dollar amount and a risk to reward standpoint. But a lot of people don't understand risk to reward, and they put their stop loss at a random point where their analysis is not wrong. So now we're in SPY puts here. I just loaded them up and my crosshairs are synced. So at the time we double topped and we got short, or we got long the 458 puts. Puts are you're capitalizing on the market moving down. Right here at 9:50 Eastern, where the market looked like this. So let's just say we played SPY puts for simplicity reasons at $1.60. So now we're long $1.60. Our stop loss is above high a day on the S&P 500. 2 minutes later, the market randomly starts making a move up. Now we're in down here. The market's about 10 points higher from where we entered at. A lot of traders freak out. If we got the puts at $1.60, 2 minutes later, these puts went to a low of $1.20. We're down 40 cents. So let's just say we traded 10 contracts. It costed us $1,600. Not a lot of money at all. In a 2-minute period, we're now down 40 cents, which equates to a $400 loss, not realized yet. We didn't sell it for a loss because we're still in the position. A lot of traders will sell their position prematurely, not when their stop loss hits, because they're psychologically attached to the money. They see how much they're up or down, and they exit the trade prematurely because of their emotions or their ego doing the talking. So what you have to do is obey by your stop loss, because this never broke the high a day, and this had an amazing sell-off. Crazy all the way into demand, perfectly worked right according to the pre-market plan. Let's just say we stopped out for a $400 loss. We would be very, very upset with ourselves because eventually where we stopped out, the market bottomed out and we would have sold at the low. How many times have you guys stopped out and immediately after stopping out, the market reverses in your favor and you say, oh, I should have never stopped out. I should still be in this and I should be up $1,000, $2,000. Well, in this case, the market eventually started selling off. We can't go up or down forever. We're going to have roadblocks, but if we maintained the style of the chart, kept our stop loss at high a day or a little above high a day, these contracts, by the time we hit demand, went to a high of $3.15. That's a little under a 100% return, and our $1,600 investment would have made us $1,500. Stress-free trade, lower lows, lower highs, right into this demand zone. Now, to illustrate this point a little further, this is a message I received from this member who's seeing a lot of success now. So he was up 17% in the March. He thinks it was on luck. He blew all of his gains and he decided he needed to learn what he was doing. He bought the Trade course, watched every video, and his overall performance was down only 1% for the year after blowing a 17% gain. Then he sized down in August, figuring that the worst could happen is he would lose money slower. Instead, started to click for him. Ever since August, he added more than 10% overall to his account, which sits now below 90,000. This was done with all trades to only use about 1 to 3,000 of premium with tight stop losses. Again, you do not need a lot of money to make money consistently in the stock market. It's all about consistency and making sure your stop losses and your losses in general are very tight and small. And since the beginning of August, he's up $9,300, $2,000 coming this month, trading strictly $1,000 to $3,000 premiums. Wants to thank me for everything he does. It's an unbelievable skill that I've taught. As he continues to get better at this, he's going to continue to slowly size up. Trading is very scalable. What you do with 1 to 3 contracts is the same process you're going to follow with 10 to 20 contracts. It's the same thing. Glad to hear that. I said, so you attribute decreasing your size had a positive effect on your trading. He said it single-handedly turned it around for him. He had no idea it would help so much. Like he said, he thought he would lose money slower, but it helped with everything. He stopped hesitating on entries. He didn't panic stopping out. He let winners run longer because he was not worried about the money. So, decreasing your trading size will have a positive effect on your trading because you are less emotionally worried and attached to the money. You can still grow your account. Example right here, right in front of you. You can still grow your account and consistently build with it. If you can consistently make money with smaller size, all you do is scale your size up when you're consistent with that, and the process, you're following the same one. The profits are going to follow it. So I recommend everyone to decrease their size. Large trading size equals more emotions, which equal more clouded judgments, which equal more impulsive decisions, which lead to more losses. Let's go back to this SPY example. Let's just say we had a $10,000 account, a $10,000 account. Let's just say we traded with, I don't know, or we had a $20,000 account, let's call it. And let's say we traded 100 SPY calls at $1.60, right? We're in at $1.60, the same example from selling off into supply, and then the market starts bouncing at demand. We're in 16,000 bucks worth of SPY calls. We're in 100 contracts. 2 minutes later, this thing starts dumping, right? SPY starts moving up again. It really never hit our stop loss, but we panic. Why do we panic? We're in with 16K. We're down now 4,000 bucks off that 16K. Our analysis is still correct. We're still not invalidating our original thesis. We sell out of this position because we're attached to the money and we don't want to lose more money. We know everything we did to work for that $4,000. And for us to lose it in a 2-minute period off of a stupid mistake, it's frustrating and our emotions really screw with our mind. So what I recommend doing, especially with volatility, is decrease your trading size. This large size brings out more emotions if you are attached to the money. It clouds our judgment. If we have our emotions constantly going off, it's going to try to trick us into certain things. It's going to try to protect us from pain. This clouds our judgment. This makes us make impulsive decisions out of fear, out of greed, and all these attribute to more losses. Watch how much money you're going to make consistently by decreasing your size and learning your process. I cannot stress your process. I can only really talk for me. Make sure it is price and volume related, as those are the only things that could physically move the market itself. But learn price and volume analysis and decrease your size. Always obey your stop loss. I don't care if it's a large loss. It should never be a large loss, but if it is, a large loss could turn into an even larger loss if you don't obey by your stop loss. I don't care if it's a small loss. Just obey it. Your stop loss is there for a reason. It's where your analysis is wrong. And then once you develop your process, strengthen your emotions, you're consistent with small size for at least 2 months, scale up. Instead of doing maybe 3 to 5 contracts, go to 10 contracts. Follow the same process you just did to consistently make money with smaller size. Scaling up is more profits following the same process. It's no different. So I guarantee you that's going to help you out. Eventually the market hit this demand zone. We bounced momentarily. And then let me add the supply zone. So this drop right here formed a new supply. We hit the supply perfectly and then continued to sell off. So now we see the bounce over here, right? The market starts stalling out. Maybe we freak out on a quick rally at the supply zone. Right, where is it? Right here. Maybe we freak out off a quick pullback. We see we're down a lot of money. And then eventually the market reverses. And these contracts exploded by end of day, all the way up to $6. So at this supply zone, at the lows, around 1 o'clock Eastern to the highs, these went up 400 something percent. If we didn't freak out and stop out of this trade, it eventually sold off past demand. And then that supply zone that formed that day, look at what happened the next day. Hit it perfectly, rejected, and had a crazy sell-off from that. Those contracts went up like 700% from supply. So crazy movement. It's crazy how such a simple tweak and a simple fix will have such a positive effect on your trading. So I hope this video helps. If it did, drop a like, comment if you have any questions, and check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. I do plan on raising the prices pretty soon as I added a full tape reading section to the A to Z course. But on that note, I'm ending it. Peace out.